Good afternoon, colleagues. My name is Alexey Tugarev. I am the managing partner of the company IBIM. And today, together with you, we are launching what can be called our first online conference of this scale, which we have titled Digital Challenges for Developers, Slay the Dragon or Put Out Fires. Well, I suppose I should say a few words about our company and about the people who will be presenting today. We have been in the market since 2011. And we brought to Russia a certain range of foreign software for construction management. And in general, almost from the very beginning of our company, we realized that focusing exclusively on technology is not entirely the right approach. And naturally, it is necessary to talk with the business, with our clients, and to build in other words to integrate technologies that we sell and implement directly into the business. Right? That is, technology should deliver an impact for the business, have an effect on the business, and provide results in terms of project cost, timelines, manageability, and so on. And our major clients in the field of consulting at the very beginning were specifically development companies. Because, well, for many reasons, in fact, working with development companies on technology was quite, well, at that time, quite convenient for us, because development companies are actually relatively compact. Right? Even a company like, for example, Rimmer Group is not some huge giant in terms of staff size. Exactly. Although at the same time, they build enormous volumes, right? And these are the kinds of companies where you could reach management, even top management, and work with them to define key strategic objectives, understand the business's own strategic goals, and in this way, adapt and integrate technologies into the company's strategic agenda. So for us, a development company, the development business as a whole is, on the one hand, a field we've long since mastered and understand well. On the other hand, of course, these are very dynamic people who change rapidly over time, sometimes implement certain technologies quite quickly, while they are more reluctant to adopt others. And in general, when we talk about development, in a way, it's the very quintessence of business, because so much is determined here. The commercial aspects show much. You can sell all these foreign operational strategies, like how to build, how to establish cooperation with partners, how to set up the partnership side, how to handle marketing, and so on. That's why, in my opinion, the development business is very interesting and without a doubt is currently going through some of the most challenging times in its history in Russia, right? As is quite clear, the development business is capital intensive. And because of this capital intensity, it is dependent on the key interest rate. The key interest rate affects consumers who buy apartments with a mortgage. And the mortgage rate is quite high right now. Bank financing also depends on the key interest rate, right? And in the end, overall economic activity largely depends on the key interest rate. That's why with such a key rate, I'm not even sure when the development business last found itself in a similar situation. Apparently, it was quite a long time ago. And of course, this additional burden that has arisen due to the current economic situation and the high key interest rates is also affecting transformation processes. Developers are actively thinking, on the one hand, about saving costs, and we'll talk about that now as well. And when it comes to saving, IT budgets are always the first to be cut. Well, maybe sometimes they're the second to be cut. Or in the case of budget cuts. On the other hand, the modern approach to company management in general assumes digitalization and the operationalization of strategy, including with the help of IT solutions. And the solutions we offer on the market, these are BIM technologies, network scheduling, basically everything related to project management automation. All this digitalization are without a doubt, on the one hand, under threat, but on the other hand, they continue to remain in active focus, including for top management, specifically in terms of operationalizing strategy and improving operational performance in construction, in terms of design timelines, and in terms of improving the quality of the projects that developers are working on. That's it. And today we decided to hold a conference that might be a little unusual for us in terms of content. We invited people whom, on the one hand, we communicate with quite a lot, and often including in conference formats and during our webinars. Most often you can also meet these people at conferences and talk to them. That's it. All of our speakers today are from development. If we're talking about, our first speaker will be Alexey Tugarev, with whom we won't be discussing digitalization, but rather we'll talk in more detail specifically from the perspective of the current historical moment in development, what the key problems are, what the main challenges facing the management of development companies are, how the market is changing, and what is happening in the market. Because naturally, any digitalization is also a certain derivative of the strategy that the owners and management of the development choose of development companies. After that, we will have colleagues from various development companies getting a bit closer to the topic of digitalization. Evgeny Seliev will join us, who is from the company MR Group, which I deeply admire. And he will talk about the use of BIM technologies and the transformation of business processes in development that are taking place there. And I always pay attention to this company, yes, because it really is an attempt to build a full-fledged chain from business strategy to requirements, from business strategy to business processes, from business processes to the need for information, for decision-making within these business processes, from the need for information to the requirements for the information model, and further to interaction with the designer and other, let's say, participants in the process who feel this BIM information model. And they managed to do it. And lately, there have been quite a lot of interesting things happening in this company, let's say, not even directly related to information technology, but rather to management. And all of this, let's say, is happening around the BIM model. I won't spoil anything further. I think Evgeny will explain it perfectly himself. And our other speaker will be Ilya Emelianov, who currently works at Sber and is involved, among other things, in the development of some Sber products, as well as being deeply engaged in the processes of managing development projects, which Sber is also involved in, you could say, to some extent as a development company, because as we all know, Sber is a broad company. It's an IT company, a development company, and a bank, right? So it really is an extremely complex organization in terms of its structure, tackling tasks on a national scale, while also implementing BIM and solving challenges within development. I'm sure this will be very interesting. After Ilya, we'll have Dmitry Shvetsova, a person I've known for a very long time. He's someone who implemented planning and tried to apply BIM at very early stages, back when he was the director of construction. So, and his experience in building and planning as a process, in my opinion, is very important and very interesting. So his presentation, Digital Construction Management, the practice of implementing CSP tools, will, in my opinion, be interesting. And in addition, Alexey Tugarev will be closing our conference. He's currently working at Level Group. And of course, many people know him as a former consultant for IBIM, the person thanks to whom many things appeared in IBIM from the standpoint of BIM methodology. So, and now he's applying a variety of interesting practices at Level Group. And in my opinion, Level Group definitely does not occupy the last place in the Moscow development market. It is a very interesting company in terms of process efficiency. I am also very pleased that BIM is part of the efficiency demonstrated by Level Group, and I think Alexey will be able to show that. Well, as I understand it, my introductory part, my announcement is finished. Let me introduce our speakers and let's say our first so-called roundtable, our physically roundtable. There will be three of us here, but our main figure today is Alexey Tugarev. And Alexey, right now we're going to talk with Alexey about the current state of the economy in development because, well, colleagues, IT is very important and valuable, but in general, everything starts with business, with money, with the opportunities available for business. Alexey, the floor is yours. Let me once again introduce who is at the table with us. Kirill Wojciuk, our permanent director of development, a person whom I am sure you all know very well. If you don't know him yet, check out his videos on YouTube. Alexey, the floor is yours.
Good afternoon, colleagues. Thank you for the invitation. The topic of digitalization and automation is actually very close to me. Right. By nature, I am the kind of person who always tries to optimize and systematize every process. My colleagues and I have been communicating, collaborating, and partnering for quite a long time. Right. Regarding your last words, yes, I completely agree. As we say, any process always starts at the top of the food chain. Right. And essentially, development typically looks like this. At the top of the food chain is the developer, right? That's why all of use vendors, implementers, software developers, consultants, and so on, any service providers depend on how their business is going and how they are feeling. Right. So yes, let's talk. Let's, as they say, commiserate together about the situation in Russian development, which, as you mentioned, isn't very cheerful. There are some fairly obvious things that everyone talks about, things that are right on the surface. That's the current state of the key interest rate, as you mentioned. There's also a certain decline in sales due to the cancellation of preferential mortgages and so on. There are also certain nuances and consequences that aren't so obvious to the general public, and I'd like to dive a bit deeper into those, so to speak. Maybe someone will hear something new for themselves and draw certain conclusions that could even influence their work strategy. Well, first of all, what I'd like to start with is the current profitability of development projects. Without beating around the bush, I'll say right away that, in my opinion, and based on my analysis, and I've been in this industry for 20 years, working in analytics, project evaluation, and project management profitability is the historic low. That the ratio of the price of the product being produced to its investment cost, in my view, is currently at its most negative point in history. And that's where we should have started. Why is this happening? Well, there are basically two components to consider here. In short, we've seen a significant increase in the cost of building materials and labor, which you are also aware of. And against this backdrop, all of this has come together at a single point with declining sales. And today, what does a decline in sales mean? It also means a deterioration in financial conditions, because the entire financial model of a developer is tied to financing, and both the interest rates and the overall financing model depend on the ratio of sales to the credit line that the investor chooses at the bank. Now, regarding project financing itself, as of today, the situation is as follows. Even just 2 years ago, project financing was moving along very briskly. Many developers were buying well, almost over 95% of the market size, using bank funds through bridge loans. The market was growing rapidly, fueled by the situation in 2021, and not just a few, but a whole wave of new companies appeared, so it seemed like everything was booming and developing. Yes, the market was waiting for the cancellation of preferential mortgages with bated breath. What will happen? Now, step by step, we are reaping the consequences of exactly that, of what would happen.
Can I ask a question along the way?
Yes.
Am I understanding you correctly that some time ago, basically, you could get into development for free without your own money?
Well, roughly speaking, yes, but still not exactly like that. I mean, if you set aside operational management, the office, and some of those initial things as a margin of error, then overall, yes, if you had certain established connections with a bank and could confirm your technological resources, which didn't necessarily have to be internal, they could be external, for example, an external technical client, a development partner, or a general contractor with extensive experience could serve as proof that you had the necessary technology then. In general, the bank could allocate funds for you to purchase a site, which is exactly what many colleagues took advantage of. So in this way, the market significantly grew with new players. Now, regarding the current situation with financing, first of all, what we call bridge loans funds for purchasing projects have now been greatly reduced and in fact practically suspended. In other words, whereas before you could buy a site with zero down payment, now at best you need 50% of your own funds, and even that is not available to everyone. So even taking into account the presence of certain technology, the circle of people with whom banks are willing to interact and have a dialogue has narrowed significantly. And today the bank communicates only with large established players, let's call them the historical giants of this market, which include the companies you mentioned. Meanwhile, new players are facing quite significant problems right now. That's as far as buying sites is concerned. That alone would be bad enough, but trouble never comes alone. In addition to the stricter requirements for purchasing sites, the requirements for actually implementing the project have also become much tougher. Here, we are talking about project financing. In other words, whereas previously an investor could take on a heavier burden at a high interest rate and carry the site through to the commissioning stage, now and this is a trend of the most recent period banks are demanding a high percentage, significant share of the investor's own capital. It's no longer possible to just get the commissioning certificate, wipe the sweat from your brow and be done with it. And then the bank would provide financing as it used to be. So everyone was waiting for the commissioning certificate, and then as if the life-giving flow of funds would start. Now that's no longer the case. And for companies that are now receiving commissioning certificates, banks are demanding at least 10% of their own capital. This is something we are seeing across all regions right now. And those who don't have their own funds find themselves in a very, unpleasant situation with huge accumulated debt from these bridge loans and no real way to refinance them properly. On top of that, we have the situation with current sales, failure to meet the financial model requirements for the bank, and as a result, project audits and endless renegotiations. In general, developers right now are having a tough time, both in terms of costs and financing, to put it mildly.
And regarding the cost price, if we're talking about different schemes for engaging a general contractor or using some kind of in-house captive general contractor, to what extent, in your opinion, has the focus of developers shifted towards squeezing and draining everything out of this process?
It has changed dramatically. I think your question is probably even...
It's a bit rhetorical question, right?
That's what I meant, yes. So cost cutting and trimming, as we like to say nowadays, is also at a historic high, right? But as we know, there are different ways to go about it. I mean, as I say at conferences, you can do it with an axe and a chainsaw, or you can do it with delicate surgical intervention. In my opinion, digitalization and systematization are exactly the processes that represent surgery, as opposed to this rough, blunt approach.
You don't happen to have any numbers, maybe some figures in your memory? Although it's unlikely you actually have them. But I'm asking with hope, specifically, how has construction costs changed recently? Do you have that?
I have data.
Has it increased significantly in the end?
I can tell you, let's start with the fact that the main share of our market is the comfort class, the most common segment. So let's use that as our starting point. So if we look back to 2015, the average figure that all developers used was the cost per square meter for the building shell, just a shell with internal engineering, at about 30,000 rubles per square meter. That's the figure that was typically used in 2014 and 2015. 2016 common areas finished. That was the figure used in the models by all the major developers, including those I worked for, consulted, and so on. So this figure increased in certain steps. Today, in comfort class models, the starting point is 90. So accordingly, over the past decade, we see that just the basic shell has increased more than threefold.
The market price?
The market price has also risen significantly, but the ratio has changed for the worse. So again, if you look at this past decade, at the beginning, we could talk about a threshold margin that investors aimed for at around 30%. Now, if you're talking about Moscow, multi-apartment housing, comfort class, then 15% is considered a good project. In other words, you still have to reach that 15%. Given the factors described above, for many, achieving any kind of positive profitability at all is now becoming almost unattainable. So the situation looks quite critical, especially for new developers. Why is this happening? Because first of all, these developers are heavily reliant on external financing and lack a large amount of their own funds. The majority of their resources depend on external financing. Accordingly, the increase in requirements for own capital forces them, so to speak, to look for this capital. Where can they find it? Accordingly, they either have to bring in a non-core partner who can join their project with this money, or they have to align themselves with a large developer. And honestly, this is one of the political directions of our authorities to encourage smaller players to join up with major developers in one form or another. So either...
Is this just about concerns for the disadvantaged co-investors, right? That a small company might...
Well, there are different opinions on this. I have my own view, and I believe that there's a certain subjective management model shaped by specific individuals who oversee the construction sector, both at the federal and regional levels. And it looks like this, to put it bluntly, but this is almost a direct quote. It's easier to deal with 10 players than with 1,000, both in terms of negotiating and controlling them. So, in my opinion, this is mainly a matter of subjective management and approach to running the industry. That's it. As for these new players, well, we've already discussed these trends, except for one thing. In addition to attracting some anchor partners to projects, there is also a growing trend of coming up with various schemes to create capital in projects that is technically their own, but not really. For example, selling part of the volume to legal entities, thus operating outside the scope of Article 214, and then bringing this to the bank as own capital, but with a discount. As one of the schemes, well, that is, people are trying to get out of it somehow. There are still things like this. Furthermore, if we talk specifically about Moscow, then in my opinion, things are even worse on the Moscow market than on average in Russia. Why? Because
in Russia, people have a different feeling.
The idea that, well, in Moscow, the average price per square meter is 400, let's say, right? So in Moscow, everything seems to be fine. But specialized players, even from the regions, many of them have already been burned, and many understand that this is not the case. What is happening in Moscow right now, just to shed some light on this situation as well? In addition to all the previously mentioned problems that concern Moscow, our requirements for architectural content have increased significantly. That is, firstly, projects are getting taller, which greatly increases the cost price. And secondly, well, if you want me to talk about specific numbers again, a significant project that grows from 100 to 200 meters in height can quite easily see its overall cost price jump by about 35 to 50%, or even more. Secondly, the requirements for facades are increasing significantly, and let's say the regulations for monitoring these requirements are also becoming more complex. That is, as you know, these polygonal models are being introduced, high polygon, low polygon models. The control over these requirements is becoming stricter. Accordingly, Moscow developers are being squeezed more and more within these constraints, and this adds to the existing factors. But that's not all. In other words, in addition to the fact that the fee for changing the permitted land use is constantly increasing, which we can partially or fully offset by creating jobs, there is now a new trend. Infrastructure agreements, a new regulation which came into force this year from December of last year has instantly doubled the burden, for example, for social infrastructure projects. So it's not just a 10 or 20% increase. Again, if we talk about the numbers, the regulations have changed. Now, according to the new regulations, Moscow charges not only for the specific indicator, like a spot in a kindergarten or a school. In addition to this, the value assessment of the land plot is now included. So if previously we were talking about on average 4 million per square meter by the end of last year, today it's already 7 to 9 million. Those are the kinds of numbers we're dealing with. And basically, this whole set of investment ingredients is significantly squeezing the remaining profit margin. That's exactly where this notorious 15% come from, which still need to be earned.
Well, here's another figure that's not so easy to quickly calculate in your head, but you like tough problems. And if we call this a capital city tax, what would be the size of this capital city tax relative to the cost price? Yes, relative to the cost price.
Listen, let's break down the economics of a certain region where a square meter costs, let's say, 150,000 rubles, and compare that to Moscow, where the price per square meter is about 400,000, something like that. In a region where a square meter costs 150 and, let's say, the normal economy works with all risks considered at an investment cost of 120, we get a healthy economic model. You just need to do a higher volume to make money. So the difference in cost price in Moscow is enormous. And from this, it logically follows that there is another trend, which I am now observing quite actively, the shift in the direction of investment expansion. That is, if before everyone was rushing to Moscow and Moscow was being attacked from all sides by regional developers with everyone trying to buy a site there and so on. In fact, this process has gone through several phases, but today there are actually quite a few cases where, on the contrary, Moscow players are moving beyond the Moscow region. First of all, there is enormous competition here. Secondly, there is this huge investment pressure due to the rising cost price. And as I see it now, more and more large Moscow companies are launching projects in the regions. On the other hand, the interest of regional players, many of whom have already been burned, is weakening significantly. At the same time, blocking entry into Moscow is, among other things, part of the deliberate urban planning policy of the Moscow authorities. Again, based on the same principle, it's easier to work with those with whom you already have established relationships than with new players.
Listen, I think there are two trends coming together here, because there's this prevalent attitude among many people that we should actively develop the various regions, including smaller towns and all of those surrounding areas. But if you just look at the standard global trends, urbanization is one of the most powerful trends, and up to 95% of the population will soon be living in large cities. And no matter how you look at it, a big city still has the advantage over a small town. And a metropolis, take, for example, the Chinese experience or the American experience, of course, in many ways it even outperforms large cities, roughly speaking. So without a doubt, this trend exists, and I can see it. Well, we all know the company Glorax, right? They're actively developing Nizhny Novgorod and I think some other regions as well. But the most important thing here is to understand how solvent the demand is in this city. How much are people actually drawn there to buy, well, large housing, right?
Well, first of all, the price per square meter is rising in major cities. So where is the price per square meter increasing? In resort cities, and we have many cities with huge resort potential. With the current geopolitical situation, as we understand, this is an additional certain boost, a certain push for this. Secondly, these are all major cities. I agree that there is a trend toward urbanization, and the city, in a way, still remains the prevailing form for modern people and will continue to absorb the majority of the population. But the city doesn't necessarily have to be just one. That's what we're talking about. And that's why now I think the trend will strengthen towards increasing the influence of fairly large cities and including the growth of development there. Why is this happening? Because while, for example, Moscow is tightening the screws, many others, let's say, are loosening them a bit carefully. That is, there are some free economic zones appearing, regional level subsidies and certain tax benefits. And overall, taxes are one of those factors that really drive the development market. In other words, there are problems with demand everywhere right now. So demand is at a stable minimum everywhere, so to speak. Another thing is the ratio of investment cost to the selling price per square meter. If a year or two ago, when I spoke at the conference, I said that on average across Russia it was about 20%. Now this has become more stratified. And in Moscow, I believe it is indeed significantly lower. In fact, for most players, the regions look more attractive today. And here we move on to the issue of hitting the right product. That is, if you talk about the same banks, yes, when escrow accounts were introduced in 2019 and up to 2024, we were saying that banks are now becoming developers. That is, banks are actively headhunting people from development, actively increasing their technological resources in development, which was also clearly visible in our client base, in our educational courses. Yes, by the number of representatives from the financial sector who come to us for our development education. So today we are saying that the trend for 2025 is precisely that banks and bankers are becoming marketers. Why is this happening? Because obviously in situations of low liquidity and rather low demand, some projects, well, sales come to a halt, while elsewhere there's still a bit of life. And banks are forced to dive deeper into this and analyze the product in more detail. So now, unlike before, it's not enough to simply say that in this location, a square meter in a certain segment will sell at a certain pace for a certain price. Now, even two projects standing side by side can sell better or worse than each other. And whereas before these differences were somehow evened out, now they are becoming decisive. And banks are now very much focused specifically on the marketing analysis of the product. Things like location, competition, in other words, marketing now plays a dominant role in this analysis. And when it comes to whether or not to allocate certain project lines, the bank now mainly makes decisions based on these parameters. And that's also another trend. So what else would I like to mention that's interesting? Right now, we're discussing that the investment climate is generally negative, yes, overall. And a logical question arises. We have different industries, so why invest in development at all, and why get involved in investment projects in the first place? And in theory, the indicator, the litmus, so to speak, the litmus test for the development market has always been the market for trading land assets intended for development projects. If you look at it, it has slowed down quite a bit right now, but it's still alive. That is, deals are being made and they are quite large. Both development companies and assets are being bought and sold. So if you look at developers now, many of them are putting a significant part of their portfolio up for sale. And these portions of portfolios are being rotated among each other in a certain sequence. And yet these deals are still happening. Now, it's a different matter that some have completely frozen their development plans for now, while others are cautiously buying up assets. But deals are still being made nonetheless. That is, deals are being made for residential projects and deals are being made for places of employment, such as office centers and so on. So this market actually shows that the development market as a whole is alive. Another matter is that, according to my analysis, the prices at which this land is currently being sold in many projects leave no margin. And honestly, it's not always clear what motivates the companies that are entering into these deals. So there are always two versions here. Either they know something we don't, or it's simply, as they say, unrestrained optimism and the expectation that there will be government support measures.
Well, one way or another, we're all expecting a reduction in the key interest rate. And yesterday's conversation between Vladimir Vladimirovich and Trump, I think, will also steer people toward an optimistic track regarding the rate cut. And the rate cut will lead to a very rapid decrease in the cost of credit.
That's a fact, yes. But according to all expectations, it doesn't look like a drastic reduction will happen in the next 2 years.
Well, a radical one is unlikely. Of course, it will be gradual. There's the risk of dropping out of the market and just watching from the sidelines. In other words, sitting on the fence isn't always a good strategy. You lose resources.
But in any industry, it works in such a way that both human and technological capital are built up gradually. And let's put it this way, when the market is going up, you make money on it. When the market is going down, well, sometimes you just have to weather it. Yes.
Well, as consultants who, broadly speaking, deal with the operational efficiency of businesses, including aspects related to construction timelines and costs, we also have mixed feelings about the situation. On the one hand, it's clear that the number of construction projects is a key input parameter for our market. That is, the more construction projects there are, the greater the interest in various technologies in theory. On the other hand, such a decrease in margins should stimulate interest in improving overall operational efficiency. That's how it is. And also to accept the risks. In fact, it's also about accepting risk.
The risks, well, of course, you have to accept them, but any risk in any business can be minimized by the level of your technology. Always. And this is exactly where we move on to answering the second part of your question. But just to finish with private capital, well, I don't consider deposit investments to be as risk-free and reliable as they're commonly believed to be. That is, they are very much dependent on the macro and microeconomic situation. And our country already has examples when, in fact, people were left with real estate, but the money, well, for various reasons, didn't quite remain.
Listen, I can't keep quiet about this. We discussed this story, if you all remember, a while ago, when this vibe started circulating in Telegram channels and the news that deposits would be frozen and taken away. So we were sitting there with people outside the industry discussing it, and I'm actually a supporter of the conspiracy theory here that this rumor was deliberately started by developers precisely to make people put their money back into real estate instead of deposits.
But
I generally agree with you. The return on equity in development is still there for now. And honestly, if you know how to do it, are ready to take on the risks, and are willing to diversify across different areas, then of course, this is a better story than a deposit. No question about it.
But still, again, as a counterpoint to the conspiracy theory, I think there are grounds for such concerns. And there could be different scenarios here. It's not necessarily that the funds are simply frozen, right? It could take all sorts of different forms. And the whole question is, well, in what time frame will you get your money back? And how much will it be worth by then? There are actually a lot of factors at play here. Yes, and now moving on to the question of technology and how it all affects things, I believe that this is definitely the main key to the current situation. That is, development as a whole is quite a conservative industry. Those industries where digital tools have already been introduced for a long time, like the financial sector, manufacturing there, they have become much more widespread. Compared to them, in development, most digitalization processes are still in their infancy. Well, at least according to my observations. So there is definitely room for growth here. And those minor effects, in my opinion, that development has gained from this digitalization processes, and now it's common to say that people are disappointed in them. Like, we expected more. Well, I would say, honestly, we just didn't try hard enough. We didn't try hard enough, and we should have pushed it further and better adapted our internal processes. That is, I am absolutely convinced that the processes you're talking about can first and foremost make the business more transparent for shareholders. And a more transparent business is one where money doesn't get lost or scattered. It also means the absence of endless rework, which is the main scourge of development projects in general. Because any rework, any resubmission for expert review, any extension of the project timeline means tens or even hundreds of millions. So once again, it's about counteracting these kinds of conflicts and so on. And if we go a little further, in my opinion, it also increases liquidity, because if we're talking about digitalization here in terms of managing future assets like smart homes, dispatching systems, then with a cautious investment approach, I believe you can significantly increase liquidity with relatively little effort. So here, in my opinion, if you gather all these benefits, implement them properly in your work, and adapt your team to this, then I think you can achieve a tremendous gain. Another thing is that it won't happen all at once, as many people here tend to expect.
Kirill, I think this is exactly the kind of point for you as someone who comes to a client and says, well, we've become a bit disappointed in your BIM. And you tell them, you didn't try hard enough, colleagues.
Actually, I have a question about that.
That's exactly right.
I completely understand, but there too did I get it right? Yes. We discussed for a while, and there was this point on the agenda. The three most important things in development are location, location, and yes, location. I understand that this is, kind of maxim, but still operational efficiency can make a difference even now, right? I mean, these...
Well, I don't agree with that. It's...
to the project's percentage, to its profitability.
No, in my opinion, that's just an oversimplification that's been forced to fit. You can take the same site, end on it, you can implement unprofitable projects, or you can make profitable ones. So if you don't have the right know-how, it's better not to even approach that wonderful site. The paradigm is changing dramatically, you see? At one point it was like this. Take 2021, for example, a site in a good location would sell no matter what you built on it, more or less. No, it just doesn't work like that anymore. Now, there's much more attention to the specific details of each project, including things like financing, team management, organizational structure, how it's set up within the developer company, and how they handle overhead costs. Given that the profit margin has decreased, the importance of things that used to be considered minor details has grown so much that, in my opinion, the relative significance of the site itself, as you mentioned, has dropped considerably. That's why, in my view, today the main focus should be on technology, rather than just buying a site at any cost in a good location.
So when you say technology, you mean product plus management.
Exactly.
This is another interesting point that I've come to realize after working for several years in a development company. If your profit margin is over 30%, you don't really need to pay attention to personal efficiency. That margin is enough to smooth out any mistakes you might make. But if it's less than 15%, then nothing will help. You really need to start dealing with it and figuring it out. Am I right in understanding that regarding whether this point is valid or not, you still think it works and that it still needs to be done?
I think that
It's never too late.
I believe that no matter what kind of business it is, no matter how well structured it is, whether the margin is 30 or 50%, there is always an opportunity to refine it and make it even better. And if you're making 30 and decide you don't need to worry about it, you might actually be missing out on another 270% in your business because of that decision. That's why my approach is that you should always be increasing technological efficiency, and during a crisis, you'll simply stay on top of the iceberg while everyone else is sinking.
Thank you. I think we had a great conversation that led us to the topic of operational efficiency and the need for businesses to work with accurate information. So it looks like we're going to take a short break now. Thank you, Alexey. Thank you, Kirill. And we'll be back to you with our next speakers.
Colleagues,